Welcome to the InterMarket Analysis video update. This video takes a look not only outside the S&P 500, but it also looks into other markets to see about the relationships between the two in order for us to gain some insight as to what might be happening with the S&P 500. This is being prepared for Monday, March 27th. The first thing we look at is S&P 500 valuation. When we look at this chart, we notice that the S&P 500 on a historical basis is overvalued. The black line on top is the S&P 500. This red dashed line is a price earnings ratio of 20 or PE ratio of 20. When we're at 20 or above on a historical basis, the market is considered to be expensive. When we drop down below the red line and then go all the way down to the blue line, that gives us a PE ratio of 15. At that point, the market is considered to be fairly valued. If we drop all the way down to the green line, that means that the market is inexpensive or cheap. Down below, this is the spread between the current price of the S&P and the red dashed line, and we're above this zero line, even though we have been coming down a little bit lately. The market on a historical basis is still considered to be expensive. This is another chart showing that same thing, but going back to 1980 and different events that have happened, you can see how the valuations were during those times. Another thing that we look at is called the Shiller PE ratio. This looks at more of an average over a period of time, and this was developed by Robert Shiller. Over on the right-hand side, we currently are at 28.36. The median and the mean for this is between 16 and 17. So on a historical basis, this is also considering that we are expensive right now. But the markets don't always look backward. They look forward. So we also have some forward PE ratios using earnings estimates and forecasts. As of the close on Friday, the forward-looking PE ratio is at 17.5. When we look at the mid-caps, the current forward PE ratio is 13.1. And the small cap PE ratio is at 12.9. So these three charts suggest that the market is not necessarily overvalued, but then there's other people that are saying earnings estimates are not really based in reality right now, and these earnings estimates may come down over a period of time, which would push the PE ratio up. Another thing we look at is growth versus value. This is a growth index showing that we're in an overall downtrend when the 50-period moving average is below the 200-period moving average. Here's a value index showing that we are in an uptrend, but value has really been coming down since the beginning of March. Then we compare the two. The top chart is growth versus value, showing how growth is underperformed but improving. The bottom chart is value versus growth, how value's been doing well but showing some weakness. Here's another index that we look at comparing growth and value. We see that growth is in an overall downtrend, even though it's been bouncing back up. This is an inverse of that same chart. Value has been in an uptrend, but is starting to come down. Another look uses ETFs, showing that growth continues to be in a downtrend, even though it's improving. This shows that value is in an uptrend, even though it's weakening. And then the last chart, growth continues to underperform value, but is trying to make a comeback. Some other markets that we look at. These are the 30 biggest software companies in the U.S. They're just about ready to give us a golden cross. It's a little hard to see right there. I'm going to wait a little bit of time before I declare that being a golden cross. Another thing we look at is inflation. The chart down below takes those areas of the CRB index that are considered inflationary, compares them to deflationary things in the CRB, and then comes up with a ratio. When we're below this moving average and declining, that means that inflation is going down, but we have been coming back up lately. Please be advised that this is a monthly chart, so it takes a long time for things to change on this chart. Another thing we look at for inflation is the Baltic Dry Index, where it's been in an overall downtrend, but it has been bouncing up. One thing that's interesting is there's a person named Tom McClellan, and his parents were the inventors of the McClellan oscillator, and he has a newsletter that I followed for a very long time. He also publishes some information at stockcharts.com, and what he's done with the Baltic Dry Index is he set it forward 26 days, and sometimes that can give us some insight as to what's happening in the market. Coming into the end of March and the beginning of April, the Baltic Dry Index did hit a bottom and then is going back up. So that might be a leading indicator. Please be warned that this relationship is not a pure inverse relationship or a correlated relationship. There are times when things don't work. Here's another chart showing that the correlation inverts. then it inverted again, then it inverted again. So it's by far from a perfect relationship, but we can look at this just to get some ideas. Another thing we check out is the CRB index, which has given us a recent death cross and has been in a downtrend. Then we look at different commodities. Here's corn, the current price. It's been coming down a little bit. Aluminum has also been coming down. Heating oil has been coming down. Gas has been dropping a bit. Natural gas has also been dropping. Oil is down under 70 and has been dropping. Diesel has also been declining. Wheat has also been coming down. Fertilizer is also coming down. Lumber has been in a really long downtrend since the beginning of 2022. It bounced back up, came back down, went sideways, bounced back up, and now it's starting to resume a downtrend. The dollar has also been in a downtrend since the early part of 2023. The euro has been in an uptrend when compared to the dollar, and the Japanese yen has also been in an uptrend. The British pound has also been in an uptrend compared to the dollar. Here's another look at the Japanese yen. Copper, something that we use as a barometer for the economy. If that's going up, things are generally rosier looking out into the future. If it's going down, things are not looking as good. We're still in an overall uptrend with copper, but we have been showing a lot of recent weakness. Then we look at the copper to gold ratio, where copper has been really underperforming gold. As this whole banking crisis has been going on, gold has really been going up. And here's another look at that same chart. The black line is the copper to gold ratio going back to 1980. This green line is the 2-year yield. What you'll notice here is they do have a tendency to go in the same direction, and even though they're on different scales, they tend to not get very far apart from each other. There's a really wide spread here, and they're going pretty much in opposite directions currently. Gold is in an uptrend and has been doing well as of late, as has silver. Looking at some indexes, this is the CRB index compared to the S&P 500, where the CRB index is underperforming the S&P. This is an inverse of that same chart showing how the S&P 500 has been showing some strength. Here's the NASDAQ 100 to the S&P 500. We're starting to get a golden cross here with this ratio. We haven't seen that in a long time. The NASDAQ 100 is really doing well and has been outperforming the S&P. Looking at some other stocks, here's mega cap. These are the really big companies, Apple, Google, Amazon, the monster companies, just about ready to give us a golden cross, but not quite there yet. Then when we compare the really, really big stocks to the equal weight S&P 500, the mega caps have really been starting to do well, but not enough yet to give us a cross. The S&P 100 has really been outperforming the S&P 500, although it's still in an overall downtrend. And small caps have really seen a lot of weakness since this banking crisis started. They've been really underperforming the S&P, even though this ratio is still in an overall uptrend. Low volatility stocks. These are the stocks that did better in 2022. It didn't mean that they went up. It just means that they sometimes went down less than some of the other stocks. We're in an overall uptrend here, but we're showing some weakness and getting really close to a death cross. Then when we compare the S&P low volatility stocks to the rest of the S&P, we had been in an uptrend, we're showing some weakness, and now this ratio is starting to break down. The Dow Jones Composite Average takes the Dow, the transports, and the utilities and puts them into one composite average. We're in an overall uptrend, but we have been seeing some recent weakness. This looks at Dow theory. Most people just use the Dow and transports. I also include utilities. The Dow has been chopping more or less sideways. We're seeing a little bit more weakness with the transport, so we want to keep an eye on that. Utilities, which did see some more weakness earlier in the year, have now been chopping more sideways. This is another way to look at Dow theory, where you have the S&P 500 on the top and the NASDAQ on the bottom, just comparing these two indexes. Not really seeing anything of note currently. The FANG stocks, these are the big ones, and they changed the acronym, but I'm just going to keep saying FANG. We have had a recent golden cross as the really big Facebook, Amazon, Apple, Netflix, and Google are doing better. ARK is still really having some problems. It has bounced up when it hit just below 30, but then it's been falling back lately, and we're not right near a golden cross. High beta stocks, these outperform both to the upside and unfortunately on the downside. When this ratio is going up, that means we're more risk on. Folks are getting into stocks. When this is going down, that means risk off. They're getting out of stocks and getting into bonds. Since this banking crisis has unveiled itself, we've been seeing a real flight to safety as people are getting out of stocks and going into bonds. This compares the S&P 500 to global stocks in Europe, Australia, Asia, and the Far East. We're still in an overall uptrend. We're above this moving average. Now, this is a monthly chart, and this is a 48-period moving average, so it takes a long time for this to change. This is looking positive on the top. The PPO on the bottom, it's starting to roll over a little bit, but it's still headed down. So that is more negative. So we're getting a mixed picture from this chart. Looking at bonds and stocks, here's the total bond ETF, giving us a recent golden cross. It fell back, and now we're seeing some more strength in bonds. The Pring World Bond Index also coming back up, going down, gave us a recent death cross, now has been going up. We've been really choppy in the bond market. Looking at the stock to bond ratio, this is a monthly chart where stocks had really been outperforming, but now we're seeing some weakness as bonds have been doing better lately. This is a ratio between shorter term maturity bonds and the S&P 500, seeing just a little bit of a tick up here, but not all that noticeable, meaning that bonds are slightly outperforming stocks. Here's high yield corporate bonds. These bonds are designed to give you a better return. Gave us a recent golden cross, falling back and now trying to go back up. Here's investment grade bonds, also a recent golden cross, falling back, trying to recuperate. The stock to bond correlation is pretty much neutral now. Stocks and bonds had been going in opposite directions. That's when we get a real low reading in our correlation. When we get a very high reading, that means they're going in the same direction. When they're in between these two bands, that means it's pretty much neutral. Looking at the Dow Jones Corporate Bond Index, after giving us a recent golden cross, corporate bonds have been doing better based on price. The 10-year Treasury yield has been coming down as bonds have been going up. Here's another look at the 10-year yield. Here's another look still at the 10-year yield where we've been really dropping. Here's the 30-year yield, how it's also been coming down lately. Here's the S&P 500 against the 10-year yield, showing how the S&P really had underperformed as interest rates were going up. Now we're starting to see the S&P outperform slightly as bonds are going up, interest rates are coming down, which is influencing this ratio. Junk bonds gave us a recent golden cross, then we saw some weakness. Now they're starting to go back up. And here's a ratio between junk bonds and government bonds. Junk bonds have been outperforming, as they should, because they get a higher yield, but they're also riskier. We've been seeing some weakness lately, but we're still in an overall uptrend. Here's shorter term bonds, showing how bond prices have been going up. The RSI is above 50 and advancing, and the MACD is also advancing, so this is a positive chart. Here's a daily chart of the yields, how they've been really coming down. Here's a weekly chart showing how the US, the UK, and German rates have been coming down. Japan is this red line down here. They have their own little story that we're keeping an eye on. Looking at the S&P in different sectors, when the S&P outperforms the utility sector, that gives some really positive strength to the S&P. Right now, we're just kind of chopping around, so it's not really helping all that much. The staples sector, these are the things that you have to get no matter what's going on in the economy. We're still in an overall uptrend, but they have been showing some weakness. Then looking at energy, which was definitely the place to be in 2022, has been in an overall uptrend, but starting to show some weakness when compared to the S&P. The tech sector gave us a recent golden cross and has been doing much better. Semiconductors also recent golden cross and performing quite well. The tech sector of the S&P, tech sector has really been outperforming the S&P, and we just saw a recent golden cross with this ratio. Then we look at the S&P to discretionary. These are the things that make life fun. Discretionary is still suffering a little bit, even though they are improving, but we're still in an overall downtrend when compared to the S&P. Energy sector, which has been in an uptrend, and it still is in an uptrend, but has been showing some weakness. Materials, still in an overall uptrend. Financials, really getting hit. They're still in an uptrend overall. That's because this happened so quick that these moving averages haven't had a chance to react. But a lot of weakness lately in the financial sector because of this whole banking crisis. Real estate has been in an overall downtrend. The blue line's below the red line, but it is bouncing back a little bit. And the utilities have also been having some problems lately. Healthcare, also just giving us a death cross in this ratio. Here's another look at healthcare, showing us the death cross and how it's been showing some weakness. Communication, which is looking a lot better, just gave us a recent golden cross with the ratio. Staples, chopping more or less sideways. Industrials also still in an overall uptrend, even though they've shown some recent weakness. The NASDAQ has been outperforming the S&P 500. It's still in an overall downtrend, but we could be getting close to a golden cross with this ratio. The NASDAQ 100 has really been outperforming the rest of the NASDAQ, and it has been in an overall uptrend. These are the 100 biggest companies in the NASDAQ. This is where we get a lot of our growth from, the idea to buy low and sell high. Some other areas that we look at, these are growth stocks compared with government bonds, where growth is starting to outperform bonds, but both have been doing a lot better as of late. The 10-year yield, which was really going up in 2022, now it's starting to come back down. We're just about ready to get a death cross here when you compare it to the tech sector. And here's the inverse of that same chart where tech was really underperforming the rise in interest rates. Now it's starting to make a comeback. We could see a golden cross soon with this ratio. Discretionary has been underperforming staples, but showing some improvement. And staples are in an uptrend when compared to discretionary. Energy, which has been really strong, is now starting to show some weakness as tech has been improving. Gold has been really outperforming the S&P. This is in an overall uptrend. And then gold to the dollar. This has been also going up with this ratio. High leverage loans. These are very risky loans. And as we've been seeing some problems in the banking sector, this is starting to come back down, even though we're still in an overall uptrend. So we'll be keeping an eye on this one. Looking at our InterMarket Analysis chart, we still have oil in the lead, followed by the dollar. Gold is starting to make a comeback. Stocks and bonds continue to be down when you go all the way back to the beginning of 2022. Looking at bank stocks, I usually don't cover this, but because of what's happening in the news, I've been talking about it. This is the bank ETF, which now is in an overall downtrend. Here's a regional banks ETF, also showing a lot of weakness. Here's another regional bank ETF, weakness. Here's a ratio between the regional banking ETF and the financials, showing a lot of weakness. And here's First Republic Bank, just because it's been so much in the news. Not so long ago, it was at about $115 per share. Currently, it's at $12.36 per share. Looking at some different indexes, this looks at the Amex, the NASDAQ, and the NYSE. Takes a 5-period moving average of their highs minus the lows. When we're above zero and advancing, that's positive. Well, we've dropped below zero. When we really get extreme, that's when we often find a bottom in the market, and we're not really there yet. Small cap index, recent golden cross, some weakness. So far, support has been holding. Then a new chart that I'm including is micro cap indexes. These are smaller stocks because they just set a recent 52-week low, even though they are still in an overall uptrend. If we continue to drop with this, we will have a death cross. So we want to keep an eye on this one too. Here's another look at the Russell 2000 index. This support level has been holding. The RSI is negative, but it is showing some improvement, but the MACD on the bottom shows that the trend is down. Here's a ratio from small caps to the S&P, shows how the red line has really been breaking down. The small caps for the Elder Impulse system are neutral. The mid caps, also recent golden cross, look like they were doing quite well, but have since fallen back and now are chopping sideways. The Elder Impulse system for the mid caps continues to be neutral. The Dow also has been chopping sideways more or less below both the 50 and 200 period moving averages. And the Elder Impulse for the diamonds is neutral. The NASDAQ just gave us a recent golden cross and we're above this pivot level. That's more positive. NASDAQ 100 is also above a pivot level after giving us a recent golden cross. The Qs for the Elder Impulse system are positive. The NYSE, recent golden cross, showing some weakness. The Wilshire, recent golden cross, then some weakness. All stocks, recent golden cross and weakness. Emerging markets, recent golden cross and some weakness. Internationally, China's starting to turn back up, as are the emerging markets. We might be bottoming a bit here in Europe, trying to turn up in Japan, and trying to turn up here in the US. Bitcoin, after giving us a recent golden cross, has got up into the 28s. Last time I looked, it bumped down a little bit into the 27s. Some correlations. This is the S&P to the dollar, just a little lower than neutral right now. Not a real strong positive or negative relationship currently. Kind of the same thing can be said with the S&P to oil. And S&P to interest rates also are pretty much neutral. The tech sector to the 10-year yield are having a slight tendency to go in opposite directions. And the S&P 500 to the 2-year yield is neutral. We always look at the home builders, and I go through this in the daily videos. We're looking down here at the bottom to see how is their relationship. Are they going in the same direction or in opposite directions? We're starting to see a breakdown in their relationship, so we'll be watching this chart very closely. Then some long-term charts. Here's the monthly chart of the NYSE. We're breaking down below this moving average. If you look at the bottom, the Kopic curve could be bottoming and possibly starting to turn up. Here's another chart of the NYSE looking at the NYSE record high percent index. This had been going up, but now it's starting to come back down. Here's the S&P with the PPO in a very long-term chart, still looking fairly positive. And comparing the S&P 500 to the CRB, where the S&P had been underperforming and now it's starting to turn up as the CRB has been going down. Here's the S&P 500 to a global index on a monthly chart where the KST is still going negative. But if you look on top, we're still above this moving average. So there's a positive aspect and a negative aspect to this chart. Here's another monthly S&P 500 showing how the CRB had been really going up. Now it's starting to come down and underperform bonds. Here's an inverse of that same chart. Here's the bonds are starting to go back up when compared to the S&P. And here's another look with the CRB on top where it's starting to show some weakness, and we're also rolling over with our ratio between the CRB and bonds. And then one more, has the price of bonds, which had been in an overall downtrend, are starting to bounce back up, and bonds are starting to outperform the CRB index. Here's another look too. In the short term, we have a KST, which is starting to look more positive. Intermediate term continues to be slightly positive. Then just an update of the few charts that I haven't talked about lately. These are the S&P 500 stocks above their 50-period moving average, not really giving us any kind of an extreme reading. And the same is true with the mid caps and the small caps. So what is positive right now? My definition of positive is when the 50-period simple moving average is above the 200-day simple moving average. Value indexes and ETFs are positive. The dynamic software index, the euro, the Japanese yen, and the British pound against the dollar. Copper, gold and silver, low volatility stocks, the Dow Jones Composite Average, FANG Index, bonds including the ETF, the high yield bonds, the investment grade bonds, world bonds, corporate bonds, and junk bonds, staples, the tech sector and semiconductors, the high leverage loans, they're hanging in there. The micro caps, small caps, mid caps, and Dow still have overall uptrends. The NASDAQ and the NASDAQ 100, the NYSE Composite, as well as the Wilshire, all stocks, emerging markets, and Bitcoin. What is negative? That's when the 50-period simple moving average is below the 200-period simple moving average. The growth indexes are still negative. The CRB, the dollar, mega cap stocks, ARK. Thank you. I hope you found this helpful. Please feel free to check out the daily video and the weekly video. After this, I will be preparing what I call the deep dive video, where I go through all the charts that I didn't really talk about in any of the videos, make a video out of that just to see if we can get any insight from those. I hope you're having a really nice weekend, and I will talk to you in the next video.